Hey, welcome everyone. This week's live is I'm here with this Steve Mullican. I'm here with Mark Ayers and also with Kelly Duncan. Mark is as you've seen him before. He's EVP of our geology and Kelly is EVP of Operations. And today we're going to be talking about kind of things that we're seeing in the oil and gas market, how it pertains to kind of what we're doing out in the field, and also how geology and operations work together to get things going. So uh, what I'd like to do is probably start with Kelly. Hey Kelly, how you doing, man?
I'm good today. Great day in the
Good.
oil field.
Hey, so Kelly, tell everybody, I mean, right now, I mean, one of the things that everybody thinks about, with oil prices being up, you know, some of that is kind of a longer term effect on how it affects operations. What are some of the short term effects that you've seen based on kind of the higher oil prices? I mean, some of the things I think of just to kind of push it along a little bit is like, transportation costs, things of that nature. What are you seeing out there that gets it immediately impacted by oil price?
The number you're correct, Steve. The number one single thing since I guess somebody said the other day we're about 70, 75 days into this elevated prices since the world markets kind of changed around a little bit is definitely logistics, transport cost. The biggest of that being fuel, and we're seeing fuel surcharges on a lot of vendors. Everything on our locations is remote, right? There's nothing's around the corner. There's no Amazon drone dropping off of equipment to location. Every single thing delivered is put on freight, gets put on a semi. So, the price, you see the price of the pump, price of diesel is around $5 a gallon. We're feeling that that's a pass through on most vendors, whether it be for the trailer houses and the fuel run the generator to actual just all delivery surcharges. So the number one single thing that's changed for us is definitely fuel surcharges. That's immediate, and hopefully, when prices affect some, that'll go when prices de-escalate a little bit. Maybe those will go away as well. Um, One other thing, kind of in the global market and the shipping market, steel prices, pipe for us is another big thing that's affected by the international and all the turmoil in the straits and whatnot. So if you already had steel inventory on the ground, short term you're good, but on a long term level, uh, we're seeing some steel prices go up, and it's primarily due to just world logistics and shipping issues.
What are you seeing now as far as getting rigs and also you know, as far as being available, frac crews, things of that nature? Are you starting to see any impacts in those schedules right now?
I wish, as an industry as a whole, I could say yes on the drilling rig contract, because that's always the drilling rig count. That's always been one of those things that's kind of used as a measuring stick to the activity, the health, or the energy, or the excitement in the oil field. And in these 75 days, there's been very little movement on drilling rig contracts. Um, so that's kind of a question on what are people thinking, $100 oil is it long term or not, based on the trends in drilling rig counts. It doesn't obviously seem that people think that's real long. On frac crew level, though, that's where things have got a little tighter. No more crews, but utilization was probably at 70% of the existing frac crews. That's just an estimate, 65, 70%, maybe around that part. 4 months ago, frac crews are at 90+% utilization right now. We literally had 2 meetings today where I'm just talking to people, and there's gaps in schedules and whatnot, but frac crew availability is tied up. And to say that that exists without drilling contracts go up tells me that there are a lot of what we call duct wells, drilling uncompleted wells. So people have drilled wells because they're drilling obligations in the last 12, 18 months, but had not rushed to complete those. The nice part is if you got the leases, you've got the wells oiled. So when the needle does jump on commodity prices, oil and gas prices, people can pull the trigger faster and step on the gas and get fracs done. So frac crews have tightened up. The utilization of frac is up high. We can still get dates. Like I said, we were in meetings today. We're pinning down some dates in the very short term, but free market, just being able to grab a crew whenever is definitely tied up. So there'll be quite a few wells coming online that were ducked. That'll be unducked and on producing soon here.
Yeah, I mean, like I said, I think that's some of the questions that, I have and a lot of people have as we've as we kind of go into this higher price environment, just kind of how the effects are. But kind of want to shift now, since I have both you and Mark on here, on kind of talking about how geology, engineering, and operations tend to, how we work together to kind of do these projects. And so I guess what I'd like to ask, first ask you guys, maybe ask you, Mark. So how important is it for us to plan when we drill wells, and what are some of the things you look at when we're planning to drill a well?
Yes, Steve. Well, we've always had to plan wells, but when we used to drill vertical wells, the planning was much simpler. Now we have to decide not only how deep we go, and how long the lateral is. And so we drill down vertically. And as an example, Kelly just finished a well. We drilled down about 7,400 feet, maybe 7,100. I can't remember exactly. And then he had to drill out 7,100 feet horizontally and the lateral. And it's rather remarkable when you think about it, because we were able to stay within a 50-foot zone out at after the well was at 14,000 measured feet from surface, and with a 6-inch diameter drill pipe. That's pretty remarkable, or drill bit. And then we have to run casing into it and cement it. And Kelly has all the burden of doing that. The geologist simply watches where the well is. We have primarily two tools we use while we're doing this. And this isn't really the planning stage, like you asked. This is really about the execution stage. But we have the old technology, which we've used for years, which is what we call mud loggers. Those are people that sit out there, and as we drill, there's little cuttings, little pieces of rock that are chewed up and circulated to the surface. And these fellows look for shows of oil and gas in them, and they prescribe the lithology. And probably more importantly now, we look at what's called a gamma ray log. This is a passive tool that runs in the horizontal well and some in the vertical well, and it measures the natural gamma ray coming from the rocks. And those are really powerful tools for steering our wells and correlating them. And so now we have a whole new class of people helping us. They're called geosteerers. And they're people that are experts at taking this information and translating it and looking at the rocks horizontally. Geologists are used to looking at rocks vertically. And if you can envision that, if you drill a vertical hole, if a zone is 50 feet thick, then it's going to be 50 feet thick in the vertical hole. When you're drilling a horizontal well, that 50-foot zone, if you stood in the middle of it, you could drill it for as long as that zone was you were at the same dip. You would never come in or out of it. So you have to be very sensitive to know whether you're near the top or the bottom of it. So that's a whole new thing that the technology's evolved, and we've become really quite proficient at drilling these long horizontals. The well we just finished was about 1.5 miles. In the Bakken, they're drilling these wells up to 3 miles. That's just remarkable to me.
Yeah, I agree. I mean, I remember first horizontal well that I ever was on, which was probably 25, 30 years ago. We were excited that we got 1,500 feet out. So, and we couldn't get any further than that. So, I mean, it is remarkable these days what technology's done. So, Kelly, from a planning perspective, what are some of the things that before we ever go out and drill a well, what are some of the things that you're having to do to get this plan to be moved forward?
As Mark said, a big part of it these days is horizontals is understanding our geology and trying to decide if we're going to pilot hole or not, and how we're going to control that. It helps us get a level of questionability, capability, and all that. One of the best tools out here, especially here in most of our drillings here in Texas, is what I call the rule of closeology, right? So we can do all the shale gas calculations, all the high end stuff, but nothing is better in the world than offset data. So first thing we do, we plop in a new area, kind of like we are here now, is we do an aerial search. We spend a lot of time in record databases. Most common here in Texas is the Railroad Commission. They're a great depository. I go straight to the commission's website, get on their system, look on the map, look on the radio. They keep great records. There's third-party systems we use as well, and we just download as much public data as you can. So looking for pressures and temperatures, and casing points are really the three big things that help us design a well. So, and then of course we got to work with the other departments too, production, all that, to see how they want a well to perform, and those performances help us figure out, how we design the wells also. But really understanding what wells have been done around you, where the points of concern are, if you can use your vendors to help with data on offset data. We had a discussion this morning about that very thing. So the more we learn about what other people do in the area, both publicly and privately, it really helps us plan a well. And planning is the key to success there.
Yeah, I mean, I agree. It does take a lot of planning. It takes, we don't have Bill on here. I mean, it takes, from the beginning, like we've talked about before, you got the land side that we've got to secure to make sure we've got everything there to drill the well. Then, between, Kelly and Mark and their teams, there's a lot that goes into the planning. I mean, we actually tend to try to what we call drill these on paper at times so that we can kind of understand, where we're headed before we get there. And we try to look at all the different scenarios that we can have that tend to, that could cause some issues, but, it does take a lot, of planning. So, what are some of the things while we're drilling and in the planning stages we look at, but what are some of the things that can impact the well performance? Mark, I'll start with you. You talked about landing in the zone, we're staying within a 50-foot window. What are some of the things that you would look for that would potentially cause, positive or negative well performance as we're drilling that lateral?
Well, it depends on the kind of rock we're drilling in too, Steve, obviously. So when we talk about these horizontal wells, we call them shale plays, but a lot of them are really what we would say is a hybrid play. Some of them have sandstone interbedded with shales, like in the Permian Basin. And so we want to stay in the most permeable, porous part of those rocks and drill in the sandstones to get the best results there. But in other areas, we try to stay in like in the Barnett Shale, we might drill in rocks that are, well, they still tend to be less ductile, but they're really not sandstones or limestones. They're sort of a shaly lime or a marl, we might call it. And as far as what affects the performance, well, getting things like fractures and faults can be positive or negative. Fault is a little offset or a big offset in the beds. And if we drill across one of those in a horizontal well, it can be a hazard for us. We can actually get lost to where we are in the well, because if we don't anticipate it, we might drill through and then end up in a different zone. That's happened some wells that we were drilling in Fisher County, for instance. We actually weren't the operator, but some wells we were in, they ran across some faults and then they were a little lost when they came on the other side of the fault. The other thing we want to do is watch in the faults to make sure that we don't have lost circulation. Kelly's been very good about that. As a matter of fact, one of the wells that we just drilled in Potter County was a horizontal, and we anticipated a little fault, only about 40, 50 feet of throw, and we hit it right on the money. Fortunately, Kelly was prepared, and it just took a little bit of the fluid, and Kelly had I'll let Kelly tell what happened, but he was prepared for it, and we were able to drill through it without any adverse impacts. But I don't know if that really answers your question, Steve, but normally when we were drilling vertical wells, it was easy. We were looking for porosity and permeability, and then we were just looking for hydrocarbon saturation. And all those things are still important, but they're not always apparent in the kind of rocks that we're drilling in now.
Well, one thing you mentioned a minute ago that just kind of maybe people might have a question about, you mentioned the word ductile. Tell us a little bit about that as far as in rock and how that can affect or not affect performance based on when we frack, complete, whatever. So,
well, yeah, that's a good point, Steve. So we want rocks. As an example, in the Bakken, has two shales that are very ductile on either side of a dolomitic interval. We call that the middle Bakken dolomite. In those areas, we want to stay in the dolomite, which may only be 50 feet thick. even though the oil's coming from the source rocks above and below, because it's very hard to create fractures in the ductile rocks. Ductile would be akin to saying taking Play-Doh and trying to, I don't know how you do it, try to frack it by blowing a bubble in it, and it would just form like a balloon. Whereas if you have some really brittle rock, it shatters like glass might shatter. So we want rock that will shatter and create our fracture network that we really need, because these reservoirs are very low permeability. I mean, we used to talk about, I actually remember the days we talked about darcies, then millidarcies, which are thousandths of a darcy. We're down to nanodarcies, which is a millionth of a darcy. We're getting very impermeable wells. So we have to be able to create these big fracture networks in order to produce them commercially. And I want to add something, and this is sort of a point that I think we should all respect, and that is the United States, with our activity, has become the world's leader in developing these kinds of reservoirs. And I was just reading an article in one of the trade magazines about how the United States is the leader, but other countries now are starting to look at potential resource plays. I mean, one of them that we always hear of is in Argentina, the Vaca de Muerte play, which is dead cow play. But that's been around for a long time, but it's really kicked up. I think Exxon was involved in it, and it's become a major source of hydrocarbon for Argentina. But we're going to see that all around the world, I think, as the more conventional prospects are more difficult to find. And that makes the United States, it's because guys like Kelly are so good at what they do, and people want to learn from them.
Well, I have to agree, man. Guys like Kelly have gotten us a lot further along the way than what we used to. And Kelly, with that, what are some of the things that when you're drilling and stuff that you're having to be very conscious of that, one, I know you have to balance a lot of things. I mean, you're balancing making sure we can drill the well, but that you're also making sure that you don't damage it to the point that we can't produce it.
You're right, Steve. And it's one of the things I love about being here at King is, we are a small team. My team, or our team, is a team. It's not that we're not siloed. We are the drilling, completions, and production department all together. So, I can walk down the hallway and ask production engineer what his concerns are and affect the drilling decisions based on that. But you are very right. Mark talked about the dangers of losing fluids. There's also or being out of zone. And a third leg to those challenges and balances is reservoir damage, right? We luckily we frack all these things now, so we can get past a lot of damage. But still, the selection of our fluids, the balance of cost of doing the operation, but also preserving the reservoir for the entire life of the well, starting with the drilling of it, is very important. You make the wrong fluid decisions, and the Mark can speak to it better than me, but he mentioned it. It's kind of a modge podge of rocks down there, and clays and shales can be very sensitive. And if we don't do our research, kind of back to your question about planning ahead earlier, and we get the wrong chemicals or the wrong fluids incompatibility, a great reservoir can go to nothing real fast. So one of the risks is knowing what we're facing. Back to Mark's question, collecting the data as the rock comes up live. We do tests. Our mud loggers are constantly doing sample tests on it. We collect some of these samples. We send them to our chemical company. We can not only damage the rock during drilling of it, but even more so during the frac job. So we do a lot of compatibility tests, a lot of geochemistry, a lot of microchemistry, and to go with Mark's words, the new fad is nanochemistry, and that's not worried about damage. That's an optimization thing. So not only do we want to make sure we don't damage the rock, we also want to do the best. And like Mark said, as a country as a whole, we want to get the most hydrocarbons we can out of each foot of rock, each nanodarcy of pore space. We want to be able to get the hydrocarbons out of there. So planning ahead to not damage it, and then planning beyond in the kind of modern technology side of things to help lubricity or porosity or just molecular behavior, so that we can get maximum production, which benefits all of us. Better production rates, higher IPs, and faster return on our investment there.
Well, that's great. And Kelly, I want to move a little bit ahead of where I know we tout you as an incredible drilling guy, but you've been in the industry, you understand the full range of operations. So as far as from a planning standpoint, what are we having to do, post drilling, post frac, and the things that we do before we even drill a well to have them ready to be put on production?
Great question, Steve. Yeah, so timing is everything, right? And you've heard me speak on here before. One of my big things is turnaround time, and dead time I really don't like. So we work backwards, and that brings in the production department and the land department too. So we all aspects work together here, and we work real close to the team here. But we're doing that very thing today. So scheduling is a huge part of that, right? And that goes from when we must drill things, ahead of time, so we can meet obligations, to when we can optimize the spending the money to getting gas down the pipeline and oil down into the refinery. So planning, timing, production, also mechanically knowing, and like I said, I've been blessed to be drilling, completions, and production on these wells, and knowing what the well types in certain regions need for assistance and lift and all that stuff helps us design the casing program. So we're not siloed here. We work the well. I kind of like to say we design a well backwards. If I know at 20,000 feet I need to have this size hole and this size pipe, I can work backwards and design the rest of the well from that. And the fact that we're a team that works close together, we respect that. Some bigger places, they're very siloed, and departments look at their optimization only. But we as a whole, King and my varied experience allows us to try to optimize cost, efficiency, frac capability, and then ultimately how to maximize production capability. Because at the end of the day, what we get paid on here is production. So the balance you mentioned earlier is how to get the molecules out of the ground most efficiently, cheapest, both to get there and then to continue producing it and to keep our operating costs low long term. So there's factors made on the drilling side of things, hole profiles, casing points, sizes of things that decisions made on the drilling side can vastly, even though that's only let's say 30 days of the 20-year life of a well. But we as a team worry about what's going on 18 years from now and use that data and knowledge of the area to help back design the well and from on paper.
Okay, great. Well, hey, I know we're neither of the three of us are economic geniuses as far as what's been going on right now, but I would like to hear your all's opinions. Mark, what are some of the trends in the industry that people should be keeping an eye on, in your opinion, over the next several months with what's going on?
Are you talking about geopolitically, or are you talking about the technology?
Technology. Well, it's going to be tough for technology to probably morph in the next couple of months. So yeah, I'm talking geopolitically.
Well, I think the interesting thing to me is that the Abu Dhabi and some of the Emirati states have decided to leave OPEC, and that's going to have some real impacts. I always tell people that I started in this industry. I got my job in this industry in '79, and I always owed it to the fact that OPEC created this tremendous demand to do a domestic exploration, and all of a sudden all the oil companies were hiring every geologist coming out of graduate school. So I think that's an interesting dynamic that once we even get the Strait of Hormuz straightened out, it's going to be interesting to see how that impacts the world as far as the energy market.
How about you, Kelly? You have an opinion on some of this?
I agree with Mark. So every morning wake up now, I have it on my list to do on the way, and I brush my teeth to pull up what the oil price, what it closed at last night, what it changed to this morning, and how that delta happened even after hours, and it's not the most dynamic it's ever been, but it's pretty darn close to the swings in prices. We're going to have that in the near term till tensions and the strait and shipping and all other things change. But like Mark said, while this, kind of, sleight of hands going on, there's bigger, more long-term things, and the OPEC and just the whole global market and who's going to get the oil from where. We saw it a couple of years ago, when Russia oil got harder to get, how it changed the market a little bit. But as the Middle East changes its dynamic and who's sending oil where and who belongs to what organization, that I think we're going to have longer term I hope it benefits all of us, you know, in the energy sector on what that is. But there's short-term changes, and then from that, we're going to see what long-term changes go with it, you know.
Yeah, absolutely. I mean, I think right now what we're looking at, I mean, we do have some short-term impacts that are going on right now, but there are going to be some long-term impacts from that because, you know, it doesn't, all of this oil that's been kind of restricted, it's just not like overnight things can come back. And a lot of people are draining their storage and they're gonna have to fill that back up. So, you know, I think, you know, pricing wise, you know, we're going to be in a pretty healthy environment. I know most of us, especially Mark and I, who are the oldest ones here, you know, and even in Kelly's, I know Kelly, when he was in this, I mean, we've seen prices from a minus $35 a barrel up to over, you know, 140, 150 a barrel. So, I mean, there's one thing we can say about our industry, that it's an exciting industry, and you know, I think it's going to be a really good investment going forward. And so
we're not predictable, right? January 1 this year, nobody said we'd be at $100 oil, you know, on May 20th. So
you're absolutely right. I always say, if any of us knew how to predict that, we'd be, you know, on our private island somewhere. So,
yes, sir.
So, hey guys, thanks for being here today. I've apologized to everybody that you're having to take a break from Rachel. Rachel is traveling today, so you had to have me as being host, and so I'm glad you stayed with us and listened to what we have to say. Rachel we'll be back. Actually, we'll be June 10th is when we'll have the next update meeting. But coming up next Wednesday at 11 a.m. on the 27th of May, our beloved Mark Ayers, along with Rachel, are going to have it's going to be a podcast called the Power Basins for Oil Companies and Drilling for Returns, featuring, and like I said, it's going to be featuring Mark and Rachel. And so, you know, you can sign up through the link that's in the description. And so, you know, we're excited about that. I think it'll be very informative. As usual, I think, you know, Mark does a great job. He's incredibly knowledgeable, and also, like most of us, very excited about being in this industry. So I appreciate everybody tuning in today. Hope everything is going well with you, and we will see you in a few weeks. You all take care. Thank you, Kelly. Thank you, Mark.
Thank you. Bye.